If the only time you think about taxes is January through April, you are operating like a new business owner instead of a thriving seven-figure CEO. How in the world did you work all year long to make multi six or even seven figures just for the IRS to take five or six of the seven figures that you made? Like they walked away with a bigger smile than you did. Does that sound familiar? And does that seem unfair? Like you earned the revenue, you celebrated the wins, but during the most recent tax time, you paid a tremendous amount to the IRS. And let's be honest here. Uncle Sam, oh, he did not make one sales call. He did not lead your phenomenal team. He did not launch your new offers. He did not put that ad together. But somehow, some way, he got paid and he got paid big time. If you're sitting there wondering, why do I have to pay so much to the IRS? If you're wondering, how can I legally and ethically reduce my tax bill? This episode is just for you. Hey, everyone, and welcome back to the Say Yes to Profits podcast, where we help service-based CEOs approaching or beyond the seven-figure mark master their finances, multiply their cash flow, minimize their taxes so that they confidently say yes to profits without stress, struggle, or setbacks. I am your host, Octavia Conner, your future virtual CFO, tax strategist, and the woman here to help high achieving CEOs say yes to profits and legally say yes to zero taxes. Come on, somebody. Speaking about the ability to say yes to zero taxes, do you feel like the IRS is robbing you this most recent tax season? Well, according to the IRS, you may feel like this because over 93% of small business owners overpay in taxes each and every year. Now, this is the reason why I wrote my new book. I'm so excited. Say Yes to Zero Taxes. You all, I have filled this book. Listen, it's like a workbook. I have well over a 100 plus tax deductions that you're probably either missing out on or you're using them incorrectly, and therefore you're living in that 93% that are overpaying the IRS each and every year. So, needless to say, if you have not grabbed your copy, you want to grab your copy today, I've put a link in the show notes. Okay. Now, in today's episode, I'm going to break down a few things that you need to know so you can stop feeling like the IRS is robbing you. All right. Number one, why seven-figure CEOs overpay the IRS. Number two, what tax planning really looks like at the level that you're currently on. Number three, the strategies you should have had in place. And if you don't, it's okay. How to put them in place right now. Number four, I'm going to talk about how to ensure that next year you take home more money than the government. Okay? Listen, there is no point in earning high multi six and seven figures just to give half of it away to the IRS. So let's get into this episode. Oh, also, make sure you hit the subscribe, like button, and share this with your CEO friends, okay? So the first step, you need to understand the real reason you're paying much more than you should. The reason why you're in that 93%. Okay, so here's the thing. Here is a truth bomb. Making more doesn't automatically mean that you're going to keep more in your business. You see, most CEOs that have crossed or on the cusp of seven figures, they're making the fatal mistake of letting their numbers sit on autopilot. What do I mean? Well, most seven figure CEOs, when they cross that glorious mark, they stop managing their finances proactively. And therefore, many problems, such as high overhead costs, high and surprise tax bills, catch them off guard. Who am I talking to? Is this you, boo? Is this you? Be honest with yourself. We haven't even reached the profit check yourself moment, and I already need you to be honest with yourself. Well, here's the thing. Most seven figure businesses treat tax planning like a one season chore between the months of January through April instead of proactively managing their taxes and their money. And guess what happens? They don't do year-round tax planning, and so things get stressful. Like, tax planning is a year-round process and should be completed behind the scenes, you all, with your CFO. Each revenue milestone you achieve should be partnered with an updated tax strategy. So you don't end up giving more to the IRS than you legally have to. Like every single quarter, you should be looking at your tax position and identifying new and effective strategies that you must implement. But if you wait until tax time to figure it out, you've already lost. Period. Okay? You literally give the IRS a front row seat and a VIP to your revenue and your year end profits when you're not doing year around tax planning. So I need you to start that today with your CFO. You got it? Yes, yes? All right. Let's move to step two. Step two is about using the tax codes to your advantage. And I deep dive into this in my book where I literally go over what is a tax deduction. So, number one, I need you to understand what a tax deduction is and how to use the different tax deductions to lower your taxable income. You see, in the IRS eyes, a tax deduction for CEOs are the business expenses that are considered ordinary and necessary for your type of business, right? Your business expenses will typically fall into one of two main categories: cost of goods and services sold, which are your direct out of pocket costs, and your operating expenses. Then you have some other ones like depreciation and things like that, but I'm not talking about that for this particular episode. What you need to understand is that your expenses are subtracted from your revenue, and what's left over is your taxable income. Now, as I said, I break this down really, really granular in the book, right? What you need to understand is that the ultimate way to reduce your taxes legally and ethically is to use your expenses to reduce your taxable income to the smallest amount possible. All right? Let's be clear on that. Let me know if you understand that, okay? But here's the thing. If you're running a high earning six figure business or seven figure business and you're still filing your taxes, or you still have a tax structure like you are a new entrepreneur, then listen, you're giving the IRS a raise each and every tax season instead of giving yourself a raise. So make sure that you're legally and ethically using your ordinary and necessary tax deductions to lower your taxable income. Okay? Got that? That's number one, under using and understanding the tax code. Number two is implementing income shifting. Well, what am I referring to? Well, income shifting is legally moving money around your household in a way that benefits you, your family, and your business, and not Uncle Sam, because he really is not your uncle. So he's really not in your family, right? Yes, yes. So the tax code wasn't written necessarily for employees. right? Pick this up, what I'm putting down. It was written for entrepreneurs who know how to play the game. So let me give you just a little bit more game. First thing, do you have a spouse? If so, put your spouse on payroll, okay? If your spouse is helping with your business, even if it is behind the scenes, such as maybe they're managing your calendar, maybe they're organizing your event, maybe they're serving as your unpaid therapist during tough days or challenging times in your business, like my husband do, okay? Put your spouse on payroll if they are. Why? Well, I'm glad you asked. Here's the thing, when you put your spouse on payroll, now you're able to use their salary as a legal and ethical tax deduction in your business. Not only that, you can contribute to their retirement account, overall reducing your tax liabilities. And on top of that, you're able to keep more money in your family when you do it that way. Okay, you got it? Now, if you're going to do this, do it the right way. Don't play with the IRS because they're not going to play with you. All right? Do it the right way. Give them tasks, chores, onboard them like a real employee. Treat them like a real employee or contractor of your business. Do not play any games and say you hire your spouse, but have no proof of what your spouse has done. You can see plenty of videos, plenty of pictures of my spouse helping me. All right. So that's one way to legally and ethically beat the IRS tax game. All right. Use the tax codes to your advantage. But wait, I'm not done. Next, you want to hire your kids. Now, I have an entire episode on how to hire your kids. Even in the book, I have an entire chapter on how to hire your kids and the guidelines for hire your kids. Okay, so here's the thing. If your child is like over the age of 7 and you can hire them to maybe help you with your social media or be on your pictures for branding or clean up your office or anything like that, you definitely want to hire them. And here's the thing, you can legally pay them up to $15,000 in 2025. In 2024, it was $14,600 tax free as a standard deduction. And you also get to take it as a tax deduction in your business, right? So that's basically money that you were already spending on them that now you can write it off. So let me paint a beautiful picture for you. That next iPad or cell phone or iPhone they want or tennis shoes they want or gaming device they want. Oh, listen, make them work for it. Take it as a tax deduction. Boom. This is how you build generational wealth and save on your taxes at the same time. Make sense? Yes, yes? Okay. But wait, I'm not done. How else can you use the tax codes to your advantage? By using the Augusta Rule, Section 280A. 280 letter A. What am I talking about? Well, you can rent your home to your business for up to 14 days per year and deduct it as a legitimate business expense. This means, let's say, if you host a board meeting, a content shooting day, a VIP, or a strategy session in your home. Well, your business will pay you a fair market rate in rent for that amount, and the income is tax free from your personal side because you don't even have to report it legally. Okay, now this is a game changer. You can create a loophole that pays you legally, and that loophole is called the Augusta Rule. But I like to call it the IRS pays me to host a CEO retreat in my living room rule. Okay? Can you get with it? Like, I literally will have my team, my assistant, come to my home. We will work In my dining room, we will have pictures, videos, we will record videos, all of that right here in my home office. And guess what? Say Yes to Profits is renting this space from Octavia Conner, and Say Yes to Profits take it as a tax deduction. Come on, somebody. Isn't this amazing? This is what I mean when I say use the tax codes to your advantage. Listen, I haven't even touched the tip of the iceberg with these tax codes. There are many more tax strategies I can share with you. As a matter of fact, I want you to join me for my upcoming masterclass, 7 tragic tax mistakes that leave CEOs broke and the IRS paid. You need to register for this upcoming masterclass today. You want to go to sayyesToprofits.com/masterclass. This masterclass is exactly what you need if you just finished tax season, but you're still financially frustrated. 2, you owe more than you expected and you're wondering why and how to legally reduce that. 3, you are profitable on paper, but when you log into your bank account, it's not there, and you're cutting this huge check to the IRS. Okay. Number 4, you have a CPA, you have a bookkeeper, you maybe have a tax accountant, but no one is helping you strategically and proactively lower your taxes. And you want to keep more of your revenue, you want to grow your business, and you want to build true CEO level wealth, but these taxes are giving you a headache. If you can relate to any of that, you need to secure your seat today at sayyesToprofits.com/masterclass, and I'll include the link in the show notes. This masterclass is definitely free, but if you become a VIP, you'll receive a copy. Yes, 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 of the Say Yes to Zero Taxes book, a private Q&A session with me, and more. All right? So definitely meet me at this upcoming masterclass. Now we have arrived to the profit check yourself moment. This is a part of the episode where you pause, reflect, and keep it 100% real with yourself. So, the question for today is, are you running a 7-figure business with a 3, 4, or 5-figure tax strategy? Or worse, no strategy at all. If the only time you think about taxes is January through April, you are operating like a new business owner instead of a thriving 7-figure CEO. If you're ready to build a business that not only earns more, hence Say Yes to Profits, but it allows you to keep more, then it is time for you to become financially intentional and proactive. Okay? Because bottom line here, using the tax codes to your advantage is how the wealthy play the game. You can do the same exact thing. You can start stacking your money internally instead of giving it to the IRS. Stop being in that 93%. Don't allow next tax season to mirror this tax season. All right? They are giving us the cheat codes as entrepreneurs. So why not beat the IRS at their own game when again they're giving you the cheat codes? You definitely didn't do all of this work required to build a profitable, successful 7-figure business so that the IRS could live their best life on your dime. Did you? Use the tax codes to receive the strategies and stop reacting to a tax bill. Okay? The solution isn't just working harder, it is working smarter. It is implementing proactive tax strategies that will protect your profits, your peace of mind, and help you have a powerful future. All right? And if you're like, Octavia, I don't even know where to begin. I'm stressed. That's okay. That's literally why I am here. Join me for my upcoming masterclass and relieve your stress. All right? Again, we're going to go over 7 tragic tax mistakes that leave CEOs broke and the IRS paid. You'll learn how to stop overpaying in taxes, how to start forecasting, how to start tax strategy, how to finally take home what you're truly worth. So again, join me on the upcoming masterclass by registering at sayyestoprofits.com/masterclass. Now, pause, take a deep breath, and understand that taxes shouldn't be a scary thing to you. You can legally pay the smallest amount possible. You can legally beat the IRS at their tax game. Also, if you've learned anything from this episode, do your girl a favor. Hit the subscribe button right now and share this episode with your CEO friends. Let's all build together, okay? And don't forget to join me for my upcoming tax masterclass at sayyestoprofits.com/masterclass. This is Octavia Conner, and until we speak, say yes to profits. Toodles! Thank you for tuning in to another episode of the Say Yes to Profits podcast. Now it is time for you to make money moves. Take action based on what you learn. Now, see you on the next episode. Say Yes to Profits. Toodles!